Morning, guys. Keith at Crypto Bullseye, and we've got Polkadot this morning, $3.62. It's currently trading, and we're in this descending pattern that we were talking about before. This is a bullish pattern. Once you get a breakout, expect volatile swings. Now, sentiment this morning is rubbish, guys, and I can tell by the interaction in the Discord group. We've got about 400 people in there. When it's quiet, the markets are doing this. Weekly, down. Daily, down. What's that an indication of? New people coming into crypto, new retail coming into crypto. The new retail that have come into crypto within the last week, this is what's happened. The people that have been around for the last month, this is what's happened. So that's why some of you guys, it doesn't hurt as much as what it does for the other guys, because the other guys that have only got in the last couple of weeks, you're experiencing this downturn when overall the macro perspective is we are bullish. We're bullish. We're in a pullback. And the next thing is, how do you play that pullback? And that's where we go into Polkadot, because we're in a daily, we're in a descending wedge. The descending wedge is a bullish pattern. Once you break out the descending wedge, expect a volatile swing. However, what we're going to do in this video is we're going to dive into the 4-hour to see if we can take advantage of any swings within the swings in the shorter time frame to try and get an entry within the actual wedge and then add to the position on the breakout. And what we're going to do collectively on this video, guys, and I mean each and every single one of you, we're all going to be doing this. We're going to be looking at the chart. We're going to be analyzing this together, and then we're going to be deciding exactly why it's bullish, what the bearish scenario is, how to play this from a risk management perspective, how you protect yourself. You look after the capital, you preserve the capital, you look after the risk, and the reward will look after itself. I promise you that. I promise you that. So when you're thinking about how much can I gain, flip your mindset, think how much can I lose? It's a powerful tool, I promise you. So we're on the daily now. We're going to look at this and we're going to analyze. Firstly, we're going to analyze this trading pattern that we're in. This trading pattern is a descending wedge. You can see that we did have a big break to the upside. We've come back down and then we're trading in a descending wedge. A descending wedge is a bullish pattern. Once we break out of the descending wedge, expect a volatile swing to the upside. Once you break out of the descending wedge, expect little resistance all the way up to $10.92. That's the first target, $10.92. Once you get a break and once you get a close from here. Now, there's two things. There's two barriers that we need to overcome. The first barrier is this trend line. How do we know it's a barrier? Because it's been rejected once, twice, 3 times, 4 times. So it's been rejected 4 times. You have to respect this as resistance. So if you respect that as resistance, we need to understand one thing. We need enough momentum to be able to coil up, firstly, to get to that resistance barrier in the first place, and then to pull back, maintain a higher low, and then have enough momentum to push through. How do we know if we've got enough momentum to push through? We look at our friends, the indicators, the stochastic RSI. So what we're waiting for, and this is the daily, we're going to go into the 4-hour very shortly. What we're waiting for is a push up, a push up, a push up to test the 200. Why is the 200 daily moving average important? When you're below, you're bearish. When you're above, you're bullish. So the 200 daily moving average is currently at $4.39. The trend line's currently at, by the time that price gets there, around $4.49. So you've got a bit of a range here. You've got a bit of a sell wall. What tends to happen with these guys is you need enough momentum, firstly, to get there. And then you need enough momentum to be able to bash through. It's not going to be one big swing. So what needs to happen, and what I would be looking for in the short term, is the stochastic to come back up into an overbought position, overbought here, above 80. Whilst it's in an overbought position, we would probably be likely at resistance, testing this 200, testing this trend line, and then the aim of the game, and this is the important thing, guys, is as we start pulling back, that we maintain a higher low structure. And then what that does is the next time it pushes up, it gives you enough power to coil through those resistance barriers like a hot knife through butter. And when that happens, what does that do, guys? What does it do? You've got stops here. You've got sell orders. You've got stops. Once you break through the stops and you break through the stops, that creates a surge in price action. This is where the bears got their protection orders. This is where the bears are protecting themselves. This is where the bears are saying, if price goes above here, we're wrong. We want to be out with a limited amount of capital possible. So they put stop losses on there. And when they got stop losses on there, you get pushes to the upside with little resistance, because the bears become the bulls or the bears lay off. So that means there's less sell orders than buy orders. There's more buy orders. And when there's more buy orders, that's what pushes the price up. So it is a psychological game, guys. You think of traders, You think of bulls, you think of bears. You've got the bulls here that are waiting to do what we've just mentioned. You've got the bears here that are waiting for a rejection and another push to the downside. Once they know that the rejection's not happened, they're stopped out. They're happy to be stopped out here. And they're happy to be stopped out here. They're happy to let the bulls have their turn. They're happy to let the pullback happen. And then they will come back in at the higher low. The tug of war battle will happen at the higher low. And that's where you get a build up of price action. That's where the slog happens, guys. And that's why you're waiting for a week, 2 weeks before you get a move. When the move happens, it happens in a day or two. And it's difficult to try and place your position during that accumulation phase while we're pulling back. It is a mindset game, guys. So that's what we're looking for on the daily. That's what I'd be looking for. Once I get a breakout, I'd be happy to add a bigger position on there. Until I get a breakout, I need to understand if I want to try and get an entry within this wedge, I need to do one thing. I need to go into a shorter time frame and try and look for clues. So I'm in a shorter time frame, I'm looking for clues. Actually, let me jump back into the daily because it's an important thing that I want to tell you. We said that this range was 368 days, so your 368-day range. What does this mean here, guys, the RSI? The RSI is a measurement of buying and selling pressure. So one thing you can see here is we're putting in higher lows, we're putting in higher lows, we're putting in higher lows on the RSI. Now, look at price over 368 days, guys. This is a huge divergence. You're consistently putting in lower lows, lower lows. So this is indicating one thing. The chart needs to catch up to what the buying and selling pressure, i.e. the RSI, is telling us. So if the chart needs to catch up, guys, what is that? It's the biggest bullish divergence that I've seen so far in the last few months. Right, back into the 4 hour. I did digress then, sorry. Right, back into the 4 hour. So what we're looking for is we're looking for a trend break. Simple, 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 diagonal trend break. Stick your trend line on there. Why do we do this? Why do we do this? Because it indicates when we've got momentum. Now, we talked about the 200 daily moving average. This is the 200 4-hour moving average. So moving average is a representation of, depending on what time frame you are, those candles over that time period, i.e. in this one 200, averaged out over a consistent period. So where the daily 200 moving average carries a lot of weight, you're above, you're bullish, you're below, you're bearish. You zoom into the shorter time frame, and this is the 4-hour 200 moving average. And you can use it as the same thing, guys. When you're above, you're bullish. When you're below, you're bearish. But this is more on a shorter time frame. So these swings happen over a shorter period. So we need to do exactly the same thing. We need to break this trend. Once you've broken this trend, you need to take out this 200. Once you take out the 200, guys, that would be my first time to enter. That's sat at $3.90. So if we get a candle which pushes above, closes above, guys, that's the important thing. If it comes back down here, it's failed. If you get a wick that does this, if you get a wick that does that, candle goes all the way to the top here, session closes here, that is a failure. You need to wait for the next candle to see what that one does, to see if that one can take out the 200 moving average. It's important to get the close, guys, really important to get the close. But what I'm saying is, from a spot perspective, adding an entry at this level here makes sense to me once we've got a break and a close of the 200 4-hour, once we get a break and a close of this trend line. Then when we go back into the daily, you understand that once we've got the big break of the 200 daily moving average and the big break of this trend line here, that's when you're going to get the volatile swing with little resistance all the way up to $10.94. If you did understand what I was saying, guys, or if you want me to explain it in a better way, let me know in the comments, because I am a TA guy. I've been doing YouTube for about 3.5 years, and I'm proud of each and every single one of you 10,000 subscribers. I can't believe I hit 10,000 subscribers, guys. Thank each and every single one of you. But if I don't explain things in a clear way, let me know in the comments or jump in the Discord group and let me know, because I'm guided by you guys. I'm not a teacher, I'm a TA guy, and I'm learning along the way as far as teaching's concerned. I was someone that was quite shy before YouTube, and I didn't even like having my picture taken, guys. And it took me so much confidence to be able to get onto YouTube. And if you go back and watch my first videos, I was a nervous wreck, and you'll hear it in my voice. So I am progressing, and I am starting to see the self-development in myself. And I urge each and every single one of you, you don't have to start a YouTube channel, guys, but self-develop yourself. Understand, if it is investing that you're into, understand how to read a price chart. How do you do that? You don't look at influencers and just do what they do, guys. You look at influencers, or you look at people and understand how they do it. Don't listen to what people tell you to do. Understand how they do it. And that's why I'm trying to make this channel a little bit different to every other channel, because I want each and every single one of you, and this is my ultimate goal, guys, for us to collectively, thousands and thousands and thousands of eyes on a chart, and for us to say, this needs to happen next. And then someone say, if this happens, then this needs to happen. And for us to collectively, as a community, to be able to have a higher probability of looking at something and understanding what the next move is likely to be. Because if you've got 1,000 people looking at a chart and you've got 1,000 people saying, I think that that's going to go one way, and 75% of them 1,000 people think it's going to go one way, when you scale that out and scale that out, guys, worldwide, all the traders in the world, all the people in the world, you are going to get an average as to what the likely move is going to be. And that's how you can get an edge, because it is better in masses, guys. Trading is a game of emotions. All that is on this chart here is a representation of human emotions at any given time. People here felt rubbish. Like literally, people felt so rubbish here. People felt rubbish here. People are feeling rubbish now. But guess what, guys? You didn't feel rubbish here. Didn't feel rubbish here. That was the euphoric stage. That's when anyone could make money. That's when everyone was making money. But guess what? The thing pulled back down, pulled back down, pulled back down, pulled back down. So this is where we are now, guys. This is where we are now. So that was a long-winded way of saying collectively, I think we are better together. So don't forget, subscribe to the channel if you do want to be a part of this community, if you do want to be a part of the journey. Get yourself in the Discord group, be a part of the family. Take care of yourself, and goodbye from me.